Hello and welcome back to the Volunteer Income Tax Training Series. I am Chris Moon and I am an Associate Teaching Professor at Iowa State University in the Ivy College of Business. This video is going to focus on adjustments to income. So we have above the line and below the line deductions. The adjustments to income are the above the line deductions. So we are going to go through and talk about who is entitled to take these adjustments. These are going to reduce the taxable income before standard or itemized deductions. And you can see certain items that are listed on this Schedule 1, educator expenses. You've got health savings account deduction. Student loan interest is another one. So we'll go through these and talk about who qualifies and what the amounts are. All right, so here are just some samples of what we're going to talk about today. Educator expenses, self-employment tax, IRA contributions, HSA, self-employed health insurance, penalties for early withdrawal, alimony, student loan interest, jury duty, and some other adjustments. Okay, when you are interviewing the taxpayer, so it's important to know what their job is, what they do for a living, because that is also going to help you in determining follow-up questions. So if you find out that the taxpayer is a third grade teacher, you definitely want to ask about the things that taxpayer purchased for her classroom or his classroom, because those are going to be potential adjustments to income. If you have a taxpayer who is self-employed, you want to definitely ask about health insurance, and you'll calculate their self-employment income, but also their self-employment tax will be calculated in there, and TaxSlayer is going to do all that for you, but it's just important to talk about that. I already talked a little bit about penalties on early withdrawal of IRAs, but penalties on early withdrawal of savings. Alimony, you want to make sure you question the client about when that was ordered and if they contributed to an IRA or HSA, if they're paying student loan interest, or if they had jury duty income repaid to employers. So just any of these items we are going to take from their total income to come up with their adjusted gross income, and that is the adjusted gross income is just before the standard or itemized deductions. Okay, educator expenses. These are only for K through 12 teachers who work a minimum of 900 hours during the school year. They can deduct up to $300 of qualified expenses, which are listed here. I know a lot of K through 12 teachers, and I am pretty confident that they spend way over $300 in qualified expenses every year, but unfortunately they are limited to the first $300. So books and supplies for their classroom, other materials used in their classroom, expenses that do not qualify, non-athletic supplies for physical education, supplies for health courses, or homeschooling. So most K through 12 teachers are going to easily come up with $300, but just make sure they get that adjustment to their income. Self-employment tax, as you go through the TaxSlayer and program and prepare the self-employment income for your taxpayer, it's automatically going to calculate the self-employment tax, and it is also automatically going to calculate the deduction for 1/2 of self-employment tax. So that is what is going to show up as the adjustment. You just need to know why it's there. That will show up as an adjustment, and also you need to inquire if the taxpayer has self-employed health insurance deduction. That is in scope for returns without premium tax calculations, but just make sure you take a second look at the rules for when the self-employed health insurance deduction is permissible. If a self-employed taxpayer has health insurance available from their spouse and they just choose not to use it, they can't deduct that self-employed health insurance as a deduction. So just make sure you know what amounts are and are not deductible. Take a look in your 4012 and review those. If you have a penalty for early withdrawal of savings, that is going to show up usually on the 1099 INT form, and it is entered on the interest statement in TaxSlayer. I've already mentioned alimony paid and alimony received in the income section of the videos, but alimony paid is deductible if it is in 2018 or earlier, and if it's also executed after 1984. It's going to be uncommon to find very many decrees that were entered before then that are still actively paying alimony, but it's possible. So if someone is paying alimony and it is a 85 to 2018 decree, they are able to deduct that as an adjustment to their income. So this is, it's an adjustment, so it comes before the itemized or standard deduction, and you need to make sure that it is actually an alimony or spousal support payment. It is not a child support payment. It's not a property settlement payment. It has to be designated as an alimony or spousal support payment. All right, if a taxpayer makes contributions to a traditional IRA, they can deduct as an adjustment up to $7,000. There are income limits on this, so TaxSlayer is going to go ahead and calculate this for you, but it's phased out depending on your modified adjusted gross income. And also, just as a note, if you are age 50 plus, the amount is actually increased to $8,000 to allow you to catch up if you need to contribute additional money to your retirement. Okay, health savings account, review their intake form to see if they have HSA checked. We don't see a ton of these, but we do see some HSAs, and a taxpayer may have a 1099 SA, and that is going to show distributions from an HSA, and it's they may also have contributions to the HSA. If their employer contributed to the HSA, you're going to see code W in box 12 on their W-2. So if you've got this HSA, just make sure you're entering that in TaxSlayer in the correct spot, and it is going to calculate those amounts for you. Just make sure you look at that 1099 SA. A lot of times, similar to the 1099 INT, taxpayers don't know that they need to bring this form to you. So if they have an HSA, they may have to actually look up the 1099 SA because they didn't know to bring it with them. All right, if a taxpayer's modified adjusted gross income is low enough, which it should be if they qualify for Volunteer Income Tax Assistance Program, and they are paying student loan interest, they can have an adjustment to their total income for the smaller of interest paid or $2,500. So this is a pretty big adjustment to income. Make sure that taxpayers are showing you their Form 1098E, and the interest that they've paid to their provider will be shown in box 1. And there's a spot on TaxSlayer to enter that information, and if they're assuming their modified adjusted gross income is low enough, they get that full adjustment up to $2,500. All right, so generally we went over the most common adjustments to income that you will see. Just make sure that you are inquiring, looking at that intake form, asking the taxpayer about if they're self-employed, especially about health insurance, and making sure that that self-employment tax gets reported correctly. If you've got a teacher, make sure you ask about those expenses, and if they've contributed to an IRA. Also note, it is traditional IRA deduction only. If they deducted to if they contributed to a Roth IRA that is post-tax dollars, it's not deductible. So just make sure you're asking what type of IRA it was if they have contributed. All right, that is it for this section. Thank you very much.